unmuted. Just gonna do a quick check. Yep, I think we are good. So, anyways, wow, man, what a Monday.
Mm-hmm.
For sure. I think I kind of saw some of that happening, but man, that was a huge move out of the gate. Um, we'll see how far it goes. I saw futures green on Sunday. It's like, well, maybe it'll follow through, but red open. I think that is going to, yeah. Adjust my video real quick. Sorry guys, you don't want to see this ugly white wall. Discord sucks. Every time I gotta make a quick adjustment. I mean, not Discord, OBS. All right, so let's get into it. I know there's a lot of trading going on. I wish I would have been able to send some alerts, but you know, it happens. I don't really trade Monday morning that much, but I know a lot of people do. So puts would have been killer at the open if you, I don't even know what the prices were. Probably way out of control. So just before we get started, I need to point out options are not for everyone, and you should get a copy of standardized characteristics and risks of options before trading. You can get a copy of that by calling 1-888-OPTIONS. So just a quick recap. I think there were two big things that moved the market last week, and we'll take a look at that and what that actually did. I put a note out last week about those, so we'll be able to take a look at those and see some probably pivots for this week, probably this month, and moving forward. So huge focus on inflation. There were two. We had the FOMC minutes. That was actually the biggest market mover of the week, and we'll jump into that and kind of go through why. And then there were also non-farm payrolls, which was a huge miss. So they're kind of conflicting, to be honest. A lower NFP number means that the economy is not doing as good as expected, and therefore they shouldn't necessarily raise rates as quickly or stop purchases as fast, just to help keep the economy stable. But at the same time, in the FOMC minutes, and I'll just hit this real quick, there was, when we look at those, really what they're looking for is people that are flipping, let's say from dovish to hawkish, dovish meaning keeping rates low, hawkish meaning moving rates higher. And there was like one dove left, and that was this is Minneapolis Fed President Neil Kashkari, who totally flipped in the notes. So he's on board for 2 rate hikes now, and I think the general sentiment of that meeting was actually just to raise rates a little bit earlier than expected. I think they were talking about June, and now we're talking about March in the notes. And of course the balance sheet reductions, which is really just not purchasing bonds, but again, kind of funky because we're purchasing bonds. So still uncertain, and that is not what the market likes. So I'm really just going to expect some choppiness until we get some clarity and some certainty. We have some big stuff coming this week in terms of testimonies. We'll hit that really quick. And CPI coming in as well. There was a France CPI came in, which was actually lower than expected. So who knows? I really don't know what to expect on that. But other headlines, really, great news for everybody. IRS is tracking $600 transactions now, so whoopee. That sucks, but it is what it is. And then another big market mover was Goldman now calling for 4 rate hikes this year, actually, which really, and I could pull it up later, but the sentiment generally, it went from 2 rate hikes to 3 rate hikes, now 4 rate hikes, with Goldman coming in at the highest, guess, really. 30-year bonds are flying. All bonds are flying, so that's going to be huge. I think I'll probably kick off the charts looking at TLT, just because that's going to be really the biggest gauge. That and the VIX and the Dixie, or the DXY. If you're not familiar with that, we'll go through that. OPEC had their meeting. It was a big meeting, but really it's just they agreed to stick with the current policy. And Getty Center, LA. I was talking to a lady this last week about Florona, the COVID plus flu that you had, Stephen.
Yeah.
And she's like, no, that's only in Israel. So I was like, nope, ta-da, there it is, LA, first Florona case, it's official. A couple other headlines, really. GameStop with the NFT headline. Doubt that that's going to hold, but it is what it is. Go Bitcoin. And then, Bitcoin fell. This was just this morning. It tagged just under 40K. I was like, whew. Last night's push actually looked pretty good, but clearly dead cat bounce. So quite unfortunate. Keynoff, we got, so I have the last 3 quarters of the Dow 30 that have reported. So overall, what this should tell you is that, most companies are still beating, and moving forward into this quarter, I think expectations are still low. There's going to be a lot of focus on, I would expect, margins, especially with rates and inflation being most of the talk right now. And that's really hitting a lot of our growth stocks. I got some companies that are just starting to turn red in my portfolio, which sucks. I'm not really doing anything about it just yet. I think it's a little overdone. I'm gonna keep an eye out, but I'm not buying this just yet. I think we got some more room to the downside, unfortunately. This week we do have JP Morgan with earnings on Friday, and we got a couple other big components. JP Morgan just happens to be the one Dow component that is reporting, and again, that is Friday. So we have some trades coming up for sure. This is the general overview. So the red days here I have are I'm not saying that this is necessarily going to be a green or red day. This is a big day in terms of news. Friday not so much, but testimonies. This is a powerful testimony, and I'll get into it. But what he's doing, he's just arguing to keep his job, and so him and the vice chair both have testimonies this week. I don't know that he will probably be forced to kind of like talk about his stance and things like that. What his logic is moving forward, and it's essentially, like his plea to and his plan moving forward. So it's going to be pretty important. I don't think that there's going to be a lot of big changes. That it'll probably be maybe just red today coming into it, and then cool down after that. So not really looking to get too bullish until at least after Tuesday, maybe Wednesday. We had one of these. I think consumer inflation was going to come in. I'm just going to check, see if we got it in. Okay, so consumer inflation just came in. It is exactly at 6% as expected, so no change there. This is expectation. So this is CPI, which will come in on Wednesday. And then otherwise, nothing really to note today. So again, Fed chairs, Powell's testimony tomorrow morning. All times here are in Pacific Standard, so apologies if you're not in my time zone, but this is how it works for me. And we have a handful of Treasury purchases. I don't typically put this here, but I did want to note, so these are what they're purchasing right now. And again, so there's previous and there's consensus, right? So as we go forward, there's not going to be a big change in here, but this is how much they're looking at buying, right? So when we talk about, dwindling down the balance sheet, this is the balance sheet right here. So, well, the Fed says, hey, look, we're going to tighten the balance sheet, but hey, I'm going to buy $6 billion worth of bonds at the same time. It's like, this is that's what the market doesn't like. And we can see the market's really pushing. The market's basically saying, hey, man, I'm going to make the move with or without you. So that's what we're seeing. Higher rates in general don't typically mean that the market's going to go down, but higher rates at this velocity and speed, the market doesn't like that for sure. So Tuesday, Powell testimony. Wednesday, core inflation. So this is CPI, really. Core being not including food and gas. I don't want to get into it, but I think it's absolutely ridiculous. Those are the two biggest things in our budgets, but They take that out, and that's what the Fed actually looks at to gauge. So this is the inflation rate. If you guys remember, Powell's been talking about a 2% target forever, and so, well, that's the target. We're sitting here at like 5%. So, I mean, anything lower will actually give more pause to probably the Treasury market. But yeah, this is supposed to be 2.5, and we're sitting at double. So that's really what the biggest issue is. And so, we'll see. Does he get to keep his job? I'm sure he will. But there you have it. Another 10-year note auction, and again, here's that budget. So this is what they're actually not that budget. They're looking at the balance statement. Anyways, I'm just gonna move forward. So I'm looking at PPI. So if CPI is Consumer Price Index, right? PPI is really Producer Price Index. So this is pretty high, but if we really if the producers are getting that inflation, I mean, they're not just going to sit there and take it, right? So this is going to be the forward gauge to CPI moving forward. It's all kind of lagging numbers, but for the most part, this PPI number, Producer Price Index, producer inflation, will trickle down to the consumers. So this will give you another gauge moving forward. Jobless claims really has not been moving markets at all, and this is that the second, I forgot what that's, his second in command testimony to see whether or not he can keep his job. And we have a 30-year long bond auction Thursday. So a lot of stuff this week for sure. Retail sales used to move the markets quite a bit, but again, it really doesn't right now. X autos is probably the one that most market participants look at. I like to look at industrial production. This is I'm more concerned right now like the services sector, and as that's really the one that's really impacted by Corona and things like that. Just to see if are they coming back to work, and how's that section doing in the economy. Consumer sentiment used to not move the markets, but definitely does move the markets. Anything below 60 is generally decent, but I was pretty surprised. This is preliminary number, but I was pretty surprised to see 70 on the last one, for sure. So it's a little strange. So really quick, I'm just gonna go ahead and jump into this. So this is a 30-minute chart. So we're already getting a little bit of bouncing. Well, I like to see this Bitcoin bounce. Like I said, I'm gonna kick it off on TLT, just because this is the one that's going to move the market the most. So orange lines I have are prior week's highs and lows. So if I were to move this to a weekly candle, week high, week low, purple is prior month high, low. And I do have average weekly moves too if you want, but I don't think we're going to need that much. So what I can say and what I can see is what was last week's. Just going to go back to the last Friday. So Friday was the 7th. Today is Tuesday, Monday. Is that right? So Friday, here, we got FOMC or non-farm payrolls in the morning, and that was lower. And so what you'll see here, this is Friday. Those came out, market kind of digested that information. Pre-market, they're in. Market kind of digests it, and then it jumps up, right? Because this is, well, maybe the market or the economy not as good as it wants, as the bond treasury market wanted it to be. So if the economy is not doing well, rates go down. This is bonds actually prices go up. So right now we're kind of bouncing off this level 141. Really looking at that, CPI is going to make the biggest move for this guy, and as long as this can settle down, then I think we can start to see the markets kind of take a breather and revive themselves a little bit. So we're basing here 141. If we break this level, to me, this is like, okay, no more non-bullish. I mean, I'm not really in. I was coming into this morning non-bullish or non-bearish perspective, but right now it's looking non-bullish for sure. I'll just say that. I think credit spreads will really be our friends as option traders. And here's the VIX to tell us exactly that. So VIX is the volatility index of the S&P 500. And if you didn't know, this is always on an option trader's gauge. We are way up here. Anything in the mid 20s, over 25, you're like full-blown sell-off. But below 20, kind of like steady to neutral. That's your non-bearish kind of market. Below 18, yeah, options are cheap, but right now they're not. So coming up on this level, I think what we can usually expect, unfortunately, is that we'll get these kind of like quick pops, a quick settle down, and then we'll see a few more. So this week, I just can't really be a big bull on the market anymore. Just what the charts are telling me, but I'm not. I think credit spreads for me are going to be more my friend, and I know that this is telling me that generally speaking, option premiums, including puts, are pretty elevated. So if I'm going to be in them, I want to be in and out pretty quickly. So choppy markets, swing trading has not been consistent. So be careful there. I'm not going to be swinging a whole lot of stuff right now. So this is the S&P. Again, last week's high, last week's low. We broke below this last week's low. This box, just as always, is the range of an average week. So far today, we've moved like half this range. If I move this to Monday's open, right, let's say right there, Monday's high, this average range would actually take us right to 454, which lines up with a pretty significant support level. If we do, and see if we got different levels, just let me know. If we do 453.70, I think would, just as a scalpy trader person, maybe tag right on this little bump. This is, I'm looking on a 30-minute chart. I can see, I like to be able to see, hey, where have buyers stepped in and defended a specific level in the past? I can see them stepping in here, little sell-off, but this is really kind of launching pad here and defended here. So somewhere in this range. So what I'd say, and if that does turn out to be the low, that would be double bottom, higher low, and then one more higher low, keeping the general trend, which is, by the way, this massive broadening range, intact for now. To the downside, the monthly level would be 449 by my account here. How's that looking? Can you guys see my screen?
I can see it on YouTube.
Oh yeah.
Not in the Zoom call.
Yeah. Yeah, all good. Sorry, I just getting a little chat. So I think that's where I'm on SPY. So right now, if we get a retest around 465, which I don't necessarily think we can expect all the way up there, I will be a seller. In the short term, I'm looking at this pre-market pivot right around here, 462.60, for potential kind of like bounce and fail. So we'll see. What we can say for sure is if it goes below 457, I have this 454 target. For what it's worth, it's only a couple points. So I don't know if there's like 0 days or something. It does set up actually for a pretty nice put calendar on SPX. Maybe not necessarily SPY. So moving on to the Qs, same kind of situation. So once we break the prior week and Qs here, the prior month low, we're just, you can't be bullish. So I was looking for this level to act as support. It's failed. So no dice, unfortunately. And now you kind of just have to look for a push back up again. There's 374 and change level, and then I'm looking for a failure, right? If it fails, then I have this again broadening range on this index as well. If I take Monday's high, we're already basically at an average week's range, maybe a little bit further. Low end of this broadening range would put you right around 365, 364. And I do see a little pivot of support on the same level, so let's call it right here. Can I pull that across? Sure I can. So 367.70, maybe a little bit lower for a wick down, but if I'm short and I'm getting that move down to 367 or lower, I'm covering, and up to 375-ish, I'm looking for a quick failure. That is what I see. So Qs well below their 50-day. SPY broke below its 50-day, broke below prior week's low and prior month's low for the Qs, and the diamonds are now following suit. So little head and shoulders-y. Again, average week's range. I'm just going to take this from Monday open. This takes me down to, see how this works. I love that. 353. If it was a bullish trending market, I would just be taking this range and throwing it right on top, but it's not. So right now I do have a little pivot, and this puts us, let's see, Monday open right here. Yeah, right around 335 and change. Kind of where we had this little inverse head shoulders, whatever pattern you want to the out kind of pattern here, with the pivot on 354. So that was a big whoosh down this morning for the Dow. I was looking at Boeing as it was on the watch list. I was like, ooh.
Yeah.
No, that was ugly. I'm glad I wasn't long there. But yeah, a lot of things, man, just looked good. I had some personal trades, like a little CCL call. I just closed out of the gate. It opened. I was like, okay, even though this looks like it could move, there's this market's just bloody right now. And normally, to be honest, like I would be buying with both hands this kind of bloody market, but with this many news items coming out, I just got to relax for a little bit, and I just kind of went and started looking at this and prepping the deck for this morning. So Russell, again, small caps, same kind of situation. So I'm taking average week's move, and I don't we don't really trade for these moonshots. I'm not trying to pull this back and be like, oh, okay, well, support was like way down here. Let's say this whole range breaks, because this is a nasty range. Yes, I know. And that'll take us to once. No. We don't do that, right? So it's just day by day, situation by situation, one move to the next, right? I do have a pivot here. This is also a monthly low at 200 on the Russell, and this is, if you're reading charts, you can call it what you want. Some people call it chaos theory, but there is an order to the madness, for sure, method to the madness. And this is it. So average moves, basically candle to candle. Market opens Monday 217.90. An average move for a week, a full week here, would take you down, and you have a monthly pivot, monthly low, prior month low 208.80. You might wick a little bit lower, and yes, you do have a broadening range here again on Russell. So could you wick down below this? Yeah, totally you could, but you want to be covering. So any move that's greater than an average move, take profit, because it's more likely than not going to retrace back and give you another opportunity to short. But you don't want to be long. You don't want to be short while it's bouncing up, right? Like that's just, you make a plan, you hit your goal, close the trade, move on to the next one. So I think, wow, look at this. Look at this. So look at this Bitcoin chart. Hilarious. Yeah, so 40,000. This was this week's low. Again, we're coming up to here. This is where it looks. This looks strong. This purple line, this prior month's low. So if Bitcoin were to fail, man, and don't get me wrong, I am a big crypto guy. This is exactly where it would fail. So I'm not long, I'm not short. Quite frankly, I'm not a Bitcoin guy, but I do know, hey, this thing moves the market, that crypto market. So a big wick down. If you're trying to get into the space, the best thing I could tell you right now is just throw some really what you feel is stupid orders out into the ether, for lack of a better term. Maybe like 27,000, something ridiculous, because there are no circuit breakers in crypto, and so if you get a market flash crash, well, it's gonna flash crash, and it'll only be there for a quick second. So just have an order working, throw it out there. Some nasty low order that you think is like completely unreasonable. If you want to find your support levels, that's fine. Right now we are testing here, and I am seeing that level 27 just because, so this is our fair value right now. We're sitting right on it, right? Peak and explosion right here at 38, so maybe 37. So do I think that we could wick down, and I mean wick really quick, anywhere in here? Yeah, probably. This puts you down to 27. Do I think we'll be there for more than a few minutes? No. So, that's where I am on the space. I am prepared for a crypto winter if we have to have it. I don't like to think about it, but it happens. Here's our altcoin chart. So Bitcoin to Ethereum, we are retesting. So as long as this line stays intact, I'm still okay. Other than that, then I'm not going to be going into Bitcoin. I'm more just kind of cashing and holding into some kind of stable coins, not necessarily staking if it's a trade, right? So cash investment is your friend or equivalent in this space right now. So cool. I'm just going to move on to some quick charts. So this was the chart. I think this is what I sent out last week. I believe so. So again, I'm going to use a 30-minute just to get some fair values. These bands right here are volatility bands, and we're going to be holding that course starting Thursday. So I'll tell you a little bit about why these are important later on. But for now, and this is extended, so I'm just going to take extended hours off for just a minute. So what I was looking at on this trade, so we had this kind of support level here that we're going off, kind of wick down, and this is a pretty big broadening range. And I say broadening, meaning like higher highs, but also lower lows, right? So this range here is getting wider, so this is broadening. That's what I like to see, and this is what we're looking at. So this high 42.20 had been taken out yesterday or Friday. We're like, dude, if this goes, it can absolutely fly. Why do we say that? Really, and I'm just going to take these bands off. Really, that's because anybody that was short in here, well, what are they going to be doing? Right about when? Right about 42.38. Anybody who was short up in here, and I'd say this pivot right here, 40, right about where we are. Anyone that was short up in here, they're all going to be covering. So I was looking for this whole range to be potentially quickly taken out as like a stop hunt for anyone that was short. So this could fly, and it still could fly. But at the same time, we're not breaking it. So is it a possibility that we clock a lower low? Yeah, totally is. So if you have the free trade, that's great. I'm hanging in there. You can take a little profit. There's no need to actually hold it, because if we get this break, it's going to be here. Maybe I'll close the rest of what I got. But it's still in that kind of like wait and see mode. JP Morgan also doing what it's supposed to be doing, right? And so these little chicken pox, by the way, that's the average daily range on the day to day move. My chart's orange, boxes are prior week's high and low. Purple boxes, prior month's high or low. 172 target is here. So coming up to earnings at the end of this week, there's definitely some situations that we can use to our advantage with knowing that this volatility is coming up. I think a lot of people that are just out, and I say outright meaning like single option traders, like to play for this earnings volatility run up into earnings, and that will happen. Just know it's good for day trades if you get a good potential movement. Actually, Stephen, how did you trade this a lot? When you still do this too, right?
I actually don't do this terribly too much since we started doing, or since you taught me the calendars for these earnings plays. But what I used to do was just try to get a really low fill the week prior, because the IV shoots up obviously on Monday, as you know, and then try to catch some kind of technical levels where it'll run off of that. It was okay. It didn't work nearly as much as the calendar plays that we do now, but
Yeah.
It real simple. Try to catch a technical level and then hope for or just play the IV increase as the week moves on.
Yeah, I think it's pretty key to be able to catch the direction right on that. What I can say is that if you do that and you're not guessing necessarily, that increasing IV as you get into that report will provide exponential gains on top of price action. But again, it's not exact, like the price action into that isn't really reliable, and with higher volatility comes higher theta decay, so swinging anything like that is pretty risky too. So if you catch
and
it, go ahead.
Yeah, that's why it wasn't terribly reliable, is because picking the correct direction on that was paramount. And it's, going into an earnings week, it can go either way.
With news that like we have right now, yeah, it can be pretty hectic. Some people try straddles, but again, it needs to be directional coming into the report. So we'll show you a little bit of some tricks that we'll play that are decent and definitely can add an edge as well. But so I had UPS too. So monthly high, prior month high here, 216. So we were breaking out. Man, I traded this once last week for this kind of move, and then quick close didn't hold. And I thought, looking at this, the other day, what day is it? Am I just completely lost? Oh my God, it's Monday.
No, it is Monday.
Oh my God, it's Monday. I'm way off, man. Anyways, yeah, let me go revisit those last SPY charts and things. Shit, we just moved half of an average week in like an hour?
Yeah.
Come on.
Yeah.
So I definitely would expect some bounces. But again, we'll see. It doesn't have to bounce. Again, it was Monday. I thought it was Tuesday. Anyways, yeah, so UPS, it just failed. So now this is last week's low. So now I'm either looking for one of two things. If you didn't get this short level, because that was a fast move. I mean, this would have been like a 200-300% move for sure. Now you're kind of looking at this kind of level to base and see where it is. So you're stuck in between these two ranges. It's kind of a no trade for me right now until it really gets back above this. And even then, I really want to see it above 219 to actually trigger a trade. So I'm not going to trade this above here. If it does break below 210, though, on the other hand, I can go all the way down to 193, down to these lower pivots. The first one, so target by target, right? If it breaks below 210, then I would have a target somewhere around 205, probably 200 at the most. So that's what we're looking at. So just got to keep adjusting as we go. So steel was looking really good. This pivot I said was a pretty big deal, and it is because I can take this all the way back and slap it right here, which is, hello, 2018 high. So expecting some resistance, I get it. But here's the daily chart, right? Inside day, kind of tightening here. This looks very squeezy to me. No trade just yet. But yeah, this is going to consolidate, and this is likely going to provide a pretty good directional trade in the very near future with an earnings catalyst coming up. So once we get direction, then I'm happy to grab something directional here. Below this prior month low, or prior month high, I'm more leaning to the downside, but we'll see. I think they got a pretty big deal for the infrastructure thing. Wow, talk about a huge fail. Boeing. This is Ryan's. It's a fake company.
Big company.
Big old double top, right? Okay, so you had this kind of range, broke out. You could say, if you wanted to chart, play the angles, whatever, right? Something like this. Easy enough to see here, break, and then when you get this break, boosh, that's what you see. You got to be really careful on these because you can get a lot of fake outs. So I like to see. I'll come back to this, revisit. See this? This is a 1 hour candle. This is Jan 3rd open. Right at the prior week, how 203 maybe for a potential reversal. We have a potential bounce here, kind of tightening range on the hourly. So this is still on watch. This is kind of biased to the downside though. Would be down to 203. From 209, it wouldn't be a bad trade actually. So I'll take a look at that. AMD, I got a bull put spread that's completely underwater here. So, and I was looking at this Friday, being like, oh, we're testing 130. It could definitely just fail, and it did. So, I'm not making a change just yet because I was doing this. But if I wasn't, then I would have actually bought a second put for a shorter dated expiration and kind of like hedge it that way. But for now, I'm not going to roll it. I'm not going to adjust it. I'm just going to see how this plays out because I would like to see a little retracement kind of back to here and then fail before I take anything or adjust anything. So keeping that as is. Steven, you had a pretty nice looking chart on Apple. I had something similar too.
So yeah, Apple currently, I mean, it obviously blasted right through that 170 level that I was looking at as a supply zone.
Yeah.
Kind of just floated around there. It looks like it's retesting that and failing at 170. So not exactly how I wanted it to play out, but I don't think anything did this morning for anybody. But
except for Ultra.
Right.
Like,
yeah,
what is that about? Anyway, yeah, I got the same level. So I think that, I had the same exact levels. I think you were saying long above here, short. Yeah, we had like scary similar levels. If I'm looking at this though, I am really like this morning's kind of retest. I saw it. I think that would have been your best entry to take a short, and you have a 167.25 level here, which has been tested once. I don't know that it's necessarily. This looks pretty dumpy to me. We have like, double top ish level here looking. It might be more straddle situation.
Yeah, it doesn't look particularly.
Yeah. Here's what I say. For sure, if you break below 127.25, it's not going up, right? Like this is your support. And this is the weekly support. So right now, I definitely would expect this here, but you're so close. I'm like, do I want to take that? What's the like? I'm going to be covering in $1.
Mm-hmm.
Like, I don't know. It might only be there for a couple seconds. So this is just consolidating. I'm going to give it a little bit, but I think everything still stays similar. If you get a kind of push up to this, if you break this intraday 170, even taking long, you'd have to cover like 171 just in case, because you're looking either this, oops, or you're looking kind of something like that in either case. So waiting, watching, those are the two kind of price action moves I would expect. I had Ford here, so here's one thing I tell you, Ford, I'm short calls on Ford on long stock positions, not moving them, might roll them down a little bit. If you were to buy puts here now on Ford, yeah, you would have had to have done it real early. If you were buying puts up here, and this is what these bands actually tell you, if you were to buy puts up here, they really wouldn't have paid you until today, because this move, you would have just been eaten up by Ivy. So that's why this short below here is not until way down here. So we'll see for now, kind of sitting on that little wick at 23.35, but it could really pull this whole thing back down to 22. So for me, I'm not really selling because I don't want to do that for an investment perspective. But would I sell some in the money calls if it got really bad? Yeah, I totally would. Again, month high 21.50, and that was a pretty big pivot. So retracing back to there would not be unexpected at all. I'm going to take a look at some quick daily drivers. So daily drivers are things that we trade on a day-to-day basis because we like these big moves. So Maison is first up. I got a pivot right here. Boom. Ooh. 31.80.
I'm looking at 31.75.
Yeah.
But I mean, with Amazon,
the numbers, come on, it's right there. Yeah. So yeah, with Amazon, we don't want, a $10 move. So with Amazon, when you're trading options on Amazon, what I can tell you is you want those days that are over $100. Anything under $50 on move on Amazon for a whole day, you might not make any money, just because Theta and IV are gonna just be chewing away at you. So a lot of times I'll save my Amazon trades to Fridays, just because all of that IV is pretty much bled out. But yeah, this is that level, 31.75, almost to a T, and we're pulling this back from right here, essentially. That's absolutely where he's getting that 31.76.17. Don't need to be to the penny. But yeah, so two scenarios, right? We just got this. That was an entry. If you didn't have it, that would have been, this is the entry, right? And you're actually trimming pretty much already. But let's see. Let me pull this back hourly. Where's my target? Yeah, 31.35. 31.30. And I just, like I said, just to the next pivot down, I mean, 9 times out of 10 I can look back at things like, I think I had 3,300 puts the other day on Amazon, and at like $1,600 and I took them down just over $2,000. And I made the mistake of looking like a couple days after, like, oh shit, they're $5,000. Yeah. That happens, right? It's part of the game. I don't care about that stuff. I just keep my targets here. This is what I can tell you. If I went back at a trade log, I do go back at a trade log and say, hey, where did my losses come from? Almost every trade and I believe most people do, are profitable at some point in time. The question isn't whether or not the trade was good. The question is whether or not, and for me, I'll just speak for myself, is whether or not I took the profit. So that said, 20% profit I think is a pretty good baseline on what we're generally looking for. So this 15-minute bar, if I'm in day trading, I will use 15-minute bars, and then I actually get my entries on a 1. I think Steven's like a 5. Steven, by the way, is one of the other pros that I trade with on a day-to-day basis. So he's my partner in crime, if you're not familiar with him. Yeah, love that guy. Anyway, so 5 above, can't really take too much from this. VIX, remember VIX trading, 22. This might be a case with it being Monday to sell a credit spread something like this that will probably give you the best return if you're not day trading. So can you day trade credit spreads? Yeah, absolutely. Otherwise, right now I'm clocking a lower high. And that's what I'd be looking at for an entry right now. Don't want to do a trade live. Let's see.
Yeah, and Amazon's tricky like that because if there's not a ton of liquidity, a ton of volume on the stock,
these order books are like 1-2 deep, right?
Yeah, it'll and you're just in outrights. It can wick you out very quickly. I think credit spreads are going to be
So
pretty good this week on that.
So really, realistically, like if I can get a credit spread way up here, 3,200, and I'm just looking at the chain. Oh yeah, look at that, $3,200 calls, 4,900 volume today already. And you know, if I want to do a $50 credit spread, boom, I can get $1,700. And that trade doesn't need Amazon to go down. It just needs it to not go above 32.18 actually to make money. So that is exactly what a non-bearish or non-bullish trade looks like. That is a credit spread. We do have an edge with the VIX trading this high. And again, 32.50 credit spread. Yeah, for almost $1,700. I mean, that looks pretty good. Even if you were to go 32.50 to 3,300. It's not the same risk reward. That is the thing with the credit spreads. You're not going to get the same risk reward, but in turn, like in exchange for higher probability, that's what you get. Let's look at Tesla real quick. Tesla.
Oh, I love Tesla.
Hello.
Love Tesla right now.
What the hell just happened? This is like, okay, so Lucid, Tesla. I wasn't expecting that. So here, prior week low, right? This is how these work. Just bounce, boom, big fat megaphone broadening range. I'm liking this. I would have really liked this tag here, and I know you had this level, you dirty dog.
I was telling you, man. You
son of a bitch.
Huge to complete that inverse head and shoulder.
Okay, this is Steven. You son of a bitch. 98.50. What did you slap on this? I know you already. Here's the thing. This guy's already out on this trade, by the way. Right? Probably. So you can look at this. He's already out, right? But good lord, what are you $1,000 calls this morning? Probably.
So yeah. Well, the 1050s were drawing all the volume. Right off the bat,
you're gonna make me cry.
It was overwhelmingly bearish this morning. There was like 10K volume on the 950 puts right out of the gate.
Yeah.
Which was giving me pause. I didn't get the exact entry that I wanted. But if you were able to snag these for 15, the 1050 calls, they're trading at 22, 23 now.
Yeah, they hit 25 real early. Yeah, that's a good 30+% winner. And yeah, they're climbing. Oh, you suck.
Yeah, so now.
So this is what happens. Yeah, these went down to 12, below 12. Oh shit, like low of the day, 10, 11.
Yeah, one of them I got tagged out of really quick, unfortunately, but that's.
What a trade.
VIX was skyrocketing.
Out the gate.
Yeah.
Yeah, so I mean now you're still looking VIX high, selling put credit spreads for a short, intraday. Credit, what else? You have to break. You're running up on resistance. So if you're going long, we want to know what's the next resistance level. So you got this kind of tag here, kind of bouncing off of it. So if you're looking at this going long again, 1065 would be that target, right? And then, yeah, you're looking at those 1050s almost exactly. Oh, you dirty dog. Look at this. He writes Tesla. This looks amazing. Pushed down to 985 to complete massive 2-month long inverse head and shoulders. Yeah. Okay. So what's the next plan here, man?
So really, intraday, I would like to see a little push down to Friday's low at 1010. Okay. I think that to me would be a good entry for some outright scalpies.
That is this yellow line right here. Exactly, 1010.
Yep. Other than that, I think we can get a decent entry on some bull put spreads.
Yeah. Oh, you could die.
I really wanted to play outrights this week, but
I know.
Vic is just not giving it to us.
Oh man, what a beautiful trade. So fast. That's why it's hard, super hard to alert this kind of stuff, or just even log it, let's say, because some of these are done before you know it. So, um, hopefully this helps. So this is what we're looking at, right? I love this setup, right? So again, orange, yellow lines. Maybe I'm colorblind. I don't know what color this is. This yellowy orange looking line is
Yeah, don't ask me.
last
I
week's
actually
high
am colorblind.
and low, right? So last week's high, last week's low, tag right there. Break below, and you'll see this a lot, kind of like fake out. And now what you're looking for is a lower or a higher low. And so what he's saying and what it would be is a higher low would signal a break in market structure. Market structure being like lower high, lower low, lower high, lower low, lower high, lower low, lower high. Right now we technically have a lower high, so you can't really say that this is bullish, and that's why you're kind of looking scalpy.
Yep.
You want to see it break. I want to see it break 1039, 1040, which would be absolutely a higher high in this short-term market structure before like really getting any thoughts about holding any longer term. But for now, what that would look like, you have one lower low. If you wanted to get granular, and intraday you can get granular like this, right? Lower low. So here's high at the open, low low, higher high here, lower or higher low, boom, right here. This little candle, that could be an entry right when you see this break. So at 999.90, that would trigger, okay, all clear, go for a day trade up to right here, which is exactly what we're talking about. Yeah, beautiful, dude. Absolutely gorgeous. What the hell? And I think this is clear. I'm seeing 1030 at this pivot. Okay, so it's on deck for sure. One more. So AMD is still same thing, kind of basing, little intraday, head and shoulders, nothing right home about. I did want to see Microsoft. So Microsoft, not on the watch list, but just something for me, like as an investor. Hey, look, if I get Microsoft back down below 300, I think I'm a buyer, or at least a nibbler, down to 296. So we're getting real close on a lot of these things. I think get your shopping list out, take a look at like what are these like, you know, long-term stocks that are going to be around for years and years. It's just another opportunity that I can see right now, just to buy this dip. Intra like quarter. You know, if you're an investor, you can look at like the monthly charts, weekly charts. If you're a day trader, 15 minutes are fine. Swing trader, you want to be looking at hour charts and above. But generally speaking, that's what I see. So cool. Good luck out there. There'll be some more stuff. And again, Thursday, we're going to start that options course. It's really just something that we do pretty regular. I've done before, and so we'll just be doing a quarterly version of that. Look at Lucid. Ready to go. And then towards the end of the month, Alcoa actually kicks off earnings season. So we will have an earnings course also that's completely different type of trading that most people have ever seen. I will say it is a professional trading system, meaning like it's very tactical and strategic. So there's no gut in there at all, and executions are paramount. So if you want to join for that one, I'll send the information out later on. And it looks like we will have a couple different courses running in parallel. So a lot of work ahead. I'm not sure if I'm going to be able to keep the signal or the trades up as frequent, but you know, full trade-off. I'll be good. Cool. That's it for me, man. You got anything else?
I thought, what was the other thing that I sent real quick?
Unity.
Unity, yeah, that's the one that I wanted to touch on, just because I was just such a big, you know, proponent of that.
120.
Yeah,
Oh,
it's been a little
you
turd
snagged
lately.
that. Look at the hell, dude. Here's your
Uh,
113. Was it?
but yeah, we're sitting right
Was
in
this
that
the
supply
previous
zone.
chart? Like, what the hell? I'm like, did you just like? Oh no. Okay, cool. Yeah. All right. So here we are currently. You got. Oh wow. Snipey. This thing's got some serious intraday moves. So what are you looking at? Supply zone around 120 to 113 ish.
Yeah.
Yeah.
Um,
Last week low I got 114 and change. So you're that's about that. And I'm gonna try and replicate your box here. So right about here to here. What's the time frame on this that you're thinking?
so right now I'm only in shares. The options chain just didn't have a ton of liquidity, so the spreads were a little bit wider than what I wanted to trade. So
Yeah.
I'm almost fully positioned into this. I'd say I'm 80 to 90% positioned into this. So I don't want to buy it down too much more.
Yeah.
But basically, if it fails out of that supply zone, I'm just going to cut my losses. Hopefully, add it at around what did I say? I think like 92 or something.
So shares almost full position. Sitting supply zone right now after a couple days of consolidation. 113 max pain on the position. If we get a daily close below the supply zone, closing out. Yep, just a reopening under 100, preferably 92.50. So you're looking, okay, potential re-entry here on this. Looks like you're targeting right here.
Yeah. However, it does look like it might be bouncing upside out of this supply zone. So
yeah,
just kind of waiting and watching. I know I was pushing this a lot the last couple of weeks, and I just wanted to give a quick update to how I'm managing it and what I'm doing with it.
So here's a weekly chart, and I will say I've been liking to take a look at my weekly charts right now before really throwing them into a filter of like a day trade. Monthly, sure, we have like 3 up, 2 down, basic market structure. Weekly, and I look for this, right? This is an inside bar, really. For me, I would like to see that bar kind of close above 127. I don't need the week to completely close. This would be major swing trade if you're actually using shares exactly what you're talking about. That's ideal. Um, but daily, yeah, like if we ever crack this 126, to me, actually even tomorrow, forget about that. Tomorrow, if 120 is today's high, if we crack that tomorrow, you're very likely off to the races to 127 plus tomorrow.
Yeah.
And that would be short-term target, right? So these white lines I use are just daily highs and lows. And this potential reversal situation, not a lot of volume though. It's really trying. Really trying. Today, it's not a long until you're above 126. But tomorrow, if this is the high, we're just going to go day by day. What's the high of the day before? If it breaks that, we're good to go. Cool.
Cool. Like Thank you.
Oh, did we see Facebook? That was the last one.
Oh, no.
Oh yeah. Dumpster fire. Hello. Okay, so that was looking. So this is that setup, right? So you have this inside day here, prior day, right? And so, yeah, that was range bound real tight, and so that was immediate break. These are just moving too fast. So now you're looking. You are looking at this rejection level right now. So, also, I don't really trade the open. Huge move. Now want to see VIX and the rest kind of like settle down. VIX is calming down, now below 22. What am I looking at here? Space. I'm looking at, oh shit, what did I put in there? I think I put like 320 calls or 320 puts. Oh yeah. They were 150 when I was looking at them. They're $500 now. So
Yeah.
if you got it, great. That's a big win. But if not, now we got to move on to the next one, which would be 315. 315, 3200 volume plus. I'd like to get it below 250, but we'll see. Anyways, it's on watch. Cool. All right, man. I'll see you.
All right. Sounds good.
Good luck. Adios.